Bitcoin just broke an 8-week ETF outflow streak that drained $2.7 billion from the products. BlackRock's IBIT led the charge with $292 million in inflows last week. The first real sign institutional money is creeping back in. But here's what nobody's talking about. We are still trading 50% below the October 2025 all-time high. The Fear and Greed Index is stuck in extreme fear at 23, and the 200-week SMA at $62,874 is staring at us like a gravity well. This week has one danger zone and one 3 to 5 day opportunity. I'll show you both right now, stay to the end. I'm giving you 2 Monday scalps and 1 swing trade that can run the next 3 to 5 days. The level that decides everything? $65,217 on the upside and $63,400 on the downside. Break 1. And the whole weekly structure resets. Here's my 3 to 5 day structural bias. Range bound with a bullish tilt, but only if we hold above $63,400. The weekly trend is still strong sell. Let's be clear about that. We've been in a downtrend since October 2025's $126,000 peak. But the daily and 4-hour trends just flip to buy. That's a conflict that creates opportunity, not confusion. Write this number down. $63,400. If this level breaks this week on volume, the whole monthly structure resets and we are looking at $60,000. Maybe even $57,500. Here's the micro insight that matters. The herd is position bearish. Retail sentiment is still leaning short. Polymarket gives a 46% chance of slipping back to $60,000 this month. But whales? They've been accumulating. The whale versus retail delta is rising, with whale long exposure spiking around the recent $58,000 bottom. That divergence, retail short, whales long, is exactly the kind of setup that leads to a liquidity squeeze. The question is whether spot demand can catch up. Right now, the 30-day spot demand metric is still negative at around minus 100,000 BTC. That's the weak link in this recovery story. Let's read the chart from the top down. Weekly, daily, 4-hour, and 60-minute. This is where the story gets interesting. Weekly time frame. Bitcoin is trading at $64,206, sitting just above the 200-week simple moving average at $62,874. That's the big one. The 200-week MA has been structural support since the 2022 crypto winter, and we are holding above it. But the weekly MACD? Still negative at minus 7,121.4. That's the macro pulse, and it's not bullish yet. The weekly RSI at 38.66 is weak but not oversold. This is a market that's stabilizing, not reversing. Daily time frame. This is where the story gets more interesting. The daily trend just flipped to buy. That's a shift in character. But the daily RSI is still only at 38.66. Which tells me momentum is improving, but we're not out of the woods. The daily MACD is showing early signs of bottoming, but I want to see a proper bullish crossover before I get excited. The daily candle close above $63,400 on Friday was the first step. 4-hour time frame. This is the money time frame for the next 2 to 3 days. The 4H trend is strong buy. That's the momentum engine. We've carved out higher lows since the $58,000 bottom, with the most recent low around $61,200 after the strategy sale news. The 4H RSI is hovering near 55 to 60, which is neutral to bullish territory. 60 minute. This is where I'm looking for Monday scalping triggers. The 1H trend is strong buy, but we are sitting right under the 60-minute resistance at $64,300 to $64,500. The market rejected that zone twice on Friday and Saturday. If we break it on the 60-minute with conviction, the next stop is $65,217. Here's what most traders will miss until Wednesday. The 200-week MA at $62,874, the 200-day MA at roughly $62,457, and the ascending trend line from the January 2023 lows are all converging in the $62,400 to $63,000 zone. That's a triple confluence support zone. The longer we hold above it, the more aggressive the squeeze becomes when we eventually break $65,217. But if we lose that zone, the downside could be violent. $60,000 becomes the next magnet, and if that breaks, $57,500 and even $55,000 come into play. The weekly levels to watch: key resistance, $65,217, are 1. This is the line that defines the week. Break it, and we target $66,615 and $68,557 to key support. $63,400, psychological and recent swing low, then $61,871, S1, then $59,933, the daily levels that act as triggers. $64,300 to $64,500 is the immediate daily resistance zone. A daily close above that opens the door to $65,217. A daily close below $63,400, and we are retesting the $61,871 support. Cross-asset linkage. Bitcoin is behaving like a risk-on asset with a geopolitical discount. The S&P 500 and Nasdaq are the real liquidity tide. If equities sell off this week on the US-Iran tensions, Bitcoin will feel it. But here's the twist. Bitcoin is also behaving like a safe haven proxy for geopolitical uncertainty. Over the weekend, with traditional markets closed, Bitcoin was effectively the only major liquid asset available to price the Iran conflict. That dual role, risk-on and risk-off, is creating the volatility that generates opportunity. Let's connect the weekend news, institutional flows, and the upcoming event calendar directly to the expected weekly price path. Weekend headline: the US carried out a third round of strikes on Iranian military targets, and Tehran declared the Strait of Hormuz closed until further notice. Bitcoin barely moved, down 0.3% over 24 hours, still up 2% on the week. That's resilience. In previous cycles, this kind of geopolitical escalation would have sent Bitcoin down 5 to 10%. The fact that we are holding tells me the market is either desensitized or we are building a base. The strategy, MSTR, sale. Strategy sold 3,588 Bitcoin for $216 million to fund dividends on its preferred stock. The market absorbed it. BTC dropped 4% on the news, then recovered and closed Monday with mild gains. That's a sign of deep liquidity and institutional demand absorbing supply. As one analyst put it, strategy didn't weaken the Bitcoin treasury model, it matured it. Institutional flows, the big 1. Spot Bitcoin ETFs posted their first weekly net inflow since May, breaking an 8-week outflow streak that had pulled $2.7 billion from the products. BlackRock's IBIT led the rebound with $221.7 million in single-day inflows on July 2nd, ending a 10-session outflow run. The IBIT ETF now holds $60.286 billion in cumulative net inflows since launch. This flow reversal removes a major headwind for Bitcoin. This week's event calendar, the narrative web, Monday or Tuesday. Markets digest the weekend Iran strikes. Oil markets reopen and will signal how seriously the market takes the Strait of Hormuz closure. Watch crude oil. If oil spikes above $75, risk assets including Bitcoin could come under pressure. Wednesday, US CPI data. This is the week's fuse. Stronger than expected CPI strengthens the dollar and pushes treasury yields higher. Headwinds for Bitcoin. Weaker CPI revives hopes of accommodative Fed policy. Tailwind for risk assets. Thursday, US PPI and jobless claims. Secondary but still market moving. Friday, Michigan consumer sentiment. The week's final data point could set the tone for the weekend carry. The 1 to 2 week directional lean. I'm leaning cautiously bullish into the CPI print, but only if we hold above $63,400. The ETF flow reversal is real, the whale accumulation is real, and the 200-week MA support is real. The invalidation level is clear, a daily close below $61,871, which would open the door to $59,933 and possibly $57,500. Second interaction trigger. Do you think Bitcoin closes above $65,000 this Friday? Comment yes or no. I'm tracking consensus for the week. Most people skip the planning phase. That's exactly where this week's money is made. Keep watching. Strategy 1, the Monday opening scalp. Scalping, high probability, focus. the first 1 to 3 hours of Monday's US session. The setup: Bitcoin is currently trading at $64,206, sitting just below the 60-minute resistance zone at $64,300 to $64,500. We've seen 2 rejections at this level on Friday and Saturday. The Monday scalp is simple. Watch for a 5-minute bullish reclaim of the $64,300 level with volume trigger condition. If price breaks above $64,300 on a 5-minute candle and holds the breakout with a second 5-minute close above $64,300, enter long. The ideal entry is a pullback to $64,250 to $64,300 after the breakout, a retest of the broken resistance as support, tight stop loss, $63,850, just below the weekend consolidation range and the 4-hour support, take profit 1, $64,800, the first liquidity pool above the weekend highs risk or reward, approximately 1 minute and 1.5 seconds, risking $450 to make $600 per BTC. What instantly voids the Monday scalp? If the 5-minute candle that breaks $64,300 closes back below $64,300 within 2 candles, the breakout is fake. Also void if we open Monday below $63,800. That signals weakness carried over from the weekend to the Monday opening SCLP entry. $64,300, 5M bullish reclaim with volume plus second 5M close above, stop loss. $63,850 take profit 1. $64,800 risk, reward, $1:1. 5 invalidation. Void if 5M candle closes back below $64,300 within 2 candles, or if Monday opened below $63,800 strategy 2, the Monday liquidity grab, scalping, counter noise. The concept: there's a clear stop-on zone just below the weekend low. Retail traders who bought the Friday pump are panicking, and their stops are clustered below $63,400 at the setup. Watch for a false breakdown below $63,400, a spike that takes out the Friday swing low and triggers the retail stops, but then snaps back immediately. The entry comes on the snapback, a 5-minute bullish engulfing candle closing back above $63,500. Entry after confirmation. Enter long at $63,550 on the bullish engulfing close, stop placement, $63,100, just beyond the wick of the fake breakdown. The logic here is that if the market continues below $63,100, the breakdown wasn't fake, it was real. Fast target, $64,200, the nearest liquidity pool and the level we were trading at before the fake-out risk reward. Approximately 1 minute and 1.5 seconds, risking $450 to make $650 per BTC. Warning: this requires aggressive execution. You need to be watching the 5-minute chart in real time. The entry window is typically 5 to 15 minutes. If you miss the snapback candle, wait for the retest. The Monday liquidity GROB entry, $63,550, 5M bullish engulfing close after false breakdown below $63,400, stop loss. $63,100 take profit 1. $64,200 risk, reward, $1:1.5 invalidation. Void if price continues below $63,100 without reversal, or if no bullish engulfing forms within 30 minutes of the break interaction cliff. Are you scalping Monday or swinging the week? Comment scalp or swing. Let's see who's built for this market. Strategy 3. 3 to 5 day swing. Swing, trend alignment. The concept: this is the one that can run the whole week. Based on the weekly or daily bias, we are looking for an entry designed to capture the core move of the entire 3 to 5 day outlook. The setup: I want to see a daily close above the 20-day MA, with confirmation from the 4-hour MACD showing momentum acceleration. The ideal trigger is a daily close above $64,500. That's the level that breaks the immediate daily resistance and signals a shift in momentum. Entry: $64,500 on the daily close above that level. If you want to get in earlier, you can enter on a 4-hour close above $64,300 with a slightly wider stop, but I prefer the daily close confirmation for the swing trade. Stop loss, $62,200. This is below the 200-week SMA, $62,874, and the 200-day MA, $62,457, but above the S1 support at $61,871. The logic is that if the weekly and daily moving averages fail to hold, the structural support is broken and the swing thesis is invalid. Take profit 1, conservative midweek target $66,615, R2. This is the first major resistance above $65,217 and represents a clean 2% move from entry. Take profit 2, stretched Friday target $68,557, R3. This is the level that fills the big imbalances and the FVG above risk in reward. Approximately 1 minute and 2.5 seconds to TP1, risking $2 300 to make $5 800 per BTC. And 1 minute and 5.2 seconds to TP2, risking $2 300 to make $12 000 per BTC. Trailing stop rule. Once price reaches halfway to TP1, $65,550, move stop to break even, $64,500. Once TP1 is hit, move stop to $65,200 to lock in profits and let the rest ride to TP2 to explicit invalidation level. A daily close below $62,200 negates the weekly outlook. If we close below that level, the 200-week MA has failed as support, and we are looking at $60,000 and potentially $57,500 for 3 to 5 days SNG entry. $64,500, daily close above 20-day MA with 4H MAC confirmation, stop loss. $62, 200 take profit 1, $66, 615 take profit 2, $68, 557 risk, air reward. 1 minute and 2.5 seconds to TP1, 1 minute and 5.2 seconds to TP2 trailing stop. Move to break even at $65,550. Move to $65,200 after TP1 invalidation. Daily close below $62. 200 never risk more than 1 to 2% per trade. The Monday scalps are smaller risk. Use 1% position sizing. The swing trade can handle a slightly larger allocation, but size it so that the stop loss at $62,200 represents no more than 2% of your portfolio. Holding through high-impact event days like Wednesday's CPI requires tighter sizing. If you're in the swing trade heading into CPI, consider scaling back half the position or tightening the stop. Stops are non-negotiable, especially on the swing. This is how you survive to trade the next big weekly move. Summarize the single most critical level to watch for the entire week. $65,217 on the upside, $63,400 on the downside. That's the box. Whichever side breaks with volume decides the week. If we break above $65,217, the squeeze targets $66,615 and then $68,557. If we break below $63,400, the 200-week MA at $62,874 becomes the first test, and if that fails, we are looking at $60,000.T's Friday's possible finale and next Sunday's follow-up. Here's the thing, if this level breaks on Friday, the whole monthly trend flips. And I'm talking about the monthly trend, not just the weekly. If we close the week above $68,557, the entire downtrend from October 2025 is called into question. If we close below $60,000, we are in full bear market territory. I'll have the updated blueprint for you this Sunday, the full weekly recap and next week's forecast. If you want last week's recap to see how we got here, that video is live now. Tap the end screen. Then hit the bell so Sunday's next week ahead alert lands before the open.